It's okay. Good morning, all. So in last class, we have understood the basic points and the slab rates applicable under both default regime as well as under the old regime. So quickly, let me revise what we have discussed yesterday. Sir, Article 265 says, except by authority of law, no one else can levy tax. Then, which authority of law can levy which type of tax? Further, there is Article 246. Article 246, 7th schedule consists of 3 lists: union list, state list, concurrent list. Okay, union list consists of matters on which central government frame law. State list, matters on which state can frame law. Concurrent list, on the matters on which both central and states can simultaneously frame laws. Okay, then we discussed about components of income tax law. How many components are there? 5. Income Tax Act 1961, Income Tax Rules, and then Annual Finance Act, circulars and notifications, and then judicial decisions. All these are cumulatively called as income tax law. Okay, if you only read act or if you only read rules, you will not get proper clarity. All these together we can call it as income tax law. Okay, then section 1, it is about the title of the act. Income Tax Act 1961, applicable to whole of India, came into force on 1st April 1962. Definitions, whenever needed, we'll discuss. Then section 3 is about previous year. What is called previous year? The year in which we earn income is called as previous year. Most of the cases, the financial year given in the question and the previous year will be the same. Okay, so previous means when you look from assessment year, yes, it is a previous year, nothing but a preceding year. Okay, generally previous year means a period of 12 months. However, when you have a new business or profession, or when you are having a source of income for the first time, then previous year starts only from that day when you started a business or when you have the source of income for the first time. Okay, then assessment year. What is called assessment year? Assessment year means the year in which income is assessed to tax. The year in which income is assessed to tax is called as what? Assessment year. Then assessment year also a period of 12 months. It is the year immediately succeeding to the previous year. Then we discussed about charging section. What does charging section says? Income tax shall be levied, nothing but charged, levied or imposed for every assessment year as per provisions of the income tax or as per the rates given in Annual Finance Act on the total income of previous year on every person. Okay, so what are the important points are? Income tax will be levied every assessment year. On what it will be levied? It will be levied on total income. Using what rates? Rates given in Annual Finance Act. Total income of which year? Total income of previous year on every person. Okay. Then person definition. Person includes individual, HUF, firm, company, AOP, BOI, local authority, artificial, judicial person. Firm even includes LLP. Then how do we compute total income? First we'll take income from all the 5 heads. Every head related income we should compute separately by taking a working note. You compute separately house property income, salaries income, capital gains income, PGBP income, IFOS income. Then take the total, take the incomes from each head and total them. Okay, if at all clubbing provisions apply. What is called clubbing? If income of some other persons has to be included in SSE's total income, then that is called as clubbing. Okay, if someone else's income has to be included in SSE's income, then that inclusion has to be made headwise, not like a total only at once. Okay, if it is related to house property, include in house property itself. Business related, include in business related. So clubbing has to be done headwise. Then if any set off and carry forward of losses are there, do that. Then you will get gross total income. From gross total income we should subtract what? Chapter 6A deductions. What are called Chapter 6A deductions are the 80 series deductions, 80C to 80U. Those Chapter 6A deductions and even 10AA deduction. 10AA, sir, Actually, section 10 series, we call them as exemptions. But 10AA is not like an exemption, it is like a deduction. So, okay, so chapter 6A and 10AA deductions, if any are there, subtract. Then you will get what? Net total income. Okay, so if simply it was referred as total income, then always they are referring to what? Net total income. Okay, then calculation of tax is also there, but I said like we'll discuss this afterwards. Okay, we'll calculate tax normally on that surcharge or rebate if applicable, plus cess, we'll get the total tax liability. Then we went on and discussed the slab rates applicable to individual, HUF, AOP, BOI, AJP under the default regime. It is an amendment, sir. Yesterday also we discussed. Okay, so what is the amendment? Okay, previously it used to be different slabs. Now the applicable slabs are like 0 to easy slabs are this time. For every 4 lakhs, there will be a change. And it will be 5% increase. 0 to 4 lakhs, nil. 4 to 8 lakhs, 5%. 8 to 12 lakhs, 10%. 12 to 16 lakhs, 15%. 16 to 20 lakhs, 20%. 20 to 24 lakhs, 25%. Above 24 lakhs, 30%. And yesterday, sir, we solved examples and I asked you to remember exactly at 24 lakhs, what is the tax liability? What is the liability, sir? 3 lakhs. Under default regime, when an individual or HUF, AOP, BOI, AJP is having 24 lakhs total income, his tax will be 3 lakhs. Okay? If he is having 30 lakhs, then what is the tax liability? 4,80,000. Why? On first 24 lakhs, 3 lakhs. On balance 6 lakhs into 30%, na 1,80,000. 3 lakhs plus 1,80,000, 4,80,000. And these slabs are same irrespective of his age and residential status. Okay. Then we discussed about the surcharge rates applicable. What are the surcharge rates applicable, sir? Up to 50 lakhs, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. Above 2 crores, 25%. Okay. So the surcharge has to be levied on what? Tax liability. Surcharge has to be levied on tax liability. Okay. Then whenever surcharge comes, then immediately we should discuss about what? Marginal relief. But every time we need not to check marginal relief. Marginal relief has to be checked only when the given total income is closer to the surcharge limits. Closer. Closer, no, not downward, sir. Upward side, if it is closer to the surcharge limit, then only we should calculate marginal relief. For that, there are certain steps. What are those steps? Step 1. Compute tax on given total income. Tax na, tax plus surcharge. Don't add cess, sir. After marginal relief only, we should go for cess. That's why don't add cess. Compute tax plus surcharge on given total income. Step 2. Identify the nearest surcharge limit and on that also compute tax plus surcharge if applicable. Okay. Then step 3. Find out the difference between the actual total income and the nearest surcharge limit we have considered. Then step 4 is nothing but marginal relief. 1 minus 2 minus 3. Okay, marginal relief we got. If we want the final tax before cess, then the step 1 liability minus marginal relief if you do, will get the final tax before adding cess. Sir, I asked you to solve 2 examples, like one at 51 lakhs, the other one at 2 crore 1 lakh. Tried? How many of you tried? 1, 2, 3, 4, 5, 6, 7, 8. Okay. Majority tried. Students who are attending live, did you guys tried? It's okay. Then we went on and discussed the slab rates applicable under old regime. In old regime, what are the slab rates applicable, sir? It depends. Okay. First, general. Within that also, general slab rates. Up to 2.5 lakhs of total income, nil. 2.5 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. Here we should remember the tax liability at 10 lakhs. If an individual under old regime having total income of 10 lakhs, then the tax liability will be 1,12,500. But there are 2 different other slabs also applicable based on the age of the individual and residential status of the individual. Okay, individual age more than or equal to 60 but less than 80. Nothing but he is a senior citizen and resident of India. Then instead of 2.5 lakhs, the basic exemption limit is 3 lakhs. Okay, nothing but the slabs are like 3 to 5 lakhs, 5%, 5 to 10 lakhs, 20%, above 10 lakhs, 30%. Okay, sir, he is a senior citizen but non-resident. Then 2.5 lakhs to 5 lakhs, that slabs is only applicable. Then if he is a super senior citizen, when we call him as super senior citizen, age is greater than or equal to 80. When it has to be checked on the first day of assessment year, if his age is more than or equal to 80. Okay, what are the slab rates, sir? Up to 5 lakhs nil. So the basic exemption limit is enhanced up to 5 lakhs. Up to 5 lakhs nil. 5 lakhs to 10 lakhs. 20%, above 10 lakhs, 30%. Okay. Then we discuss the surcharge rates applicable under the old regime. What are the surcharge rates applicable under old regime, sir? Up to 50 lakhs, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. 2 to 5 crores, 25%. Above 5 crores, 37%. Again, here also marginal relief will come. Okay, till here we have discussed in the last class. So now we are going to discuss about the special tax rates. Sir, the special rates, okay, on certain incomes, instead of applying the general rates which we have discussed, we will be applying special rates. Sir, till now the tax rates we discussed are either old regime or default regime. We discussed only from the perspective of individual, HUF, AOP, BOI, AJP. These 5 people only. But in person definition, there are other peoples also, like company, firm, local authority. That we'll discuss afterwards. Okay. So now we're gonna discuss about special rates. Okay, on certain incomes, instead of the general rates or the general slab rates we have discussed, either under default regime or under the old regime, these special tax rates only applicable. So the point to be clarified is, special rates are applicable irrespective of the regime you have chosen, old regime or default regime. Whichever the regime you have chosen, special tax rates are applicable. And then second point, special tax rates are not applicable only just to individual HUF, AOP, BOI, AJP. These are applicable to each and every category of person. Each and every category of person. Okay. So now, first type of special rate incomes are under capital gains. Capital gains can be broadly classified into 4 types. First 2 types, then we'll again divide into 4 types. What are the first 2? Long-term capital gain, short-term capital gain. Sir, I am not going much more technicalities like when long-term, when short-term. That will anyhow connect it in the capital gains chapter. Okay. Long-term capital gain, short-term capital gain. Long-term capital gain again divided into 2 types. Short-term capital gain also again divided into 2 types. Sir, under long-term capital gains, if the capital asset transferred is, listed equity share, units of equity oriented fund, or units of business trust. These 3 capital assets. What are those 3? Listed equity share, listed units of equity oriented fund, or units of business trust. Okay. Sir, equity shares now you understand. What is unit of equity oriented fund? Sir, units of equity oriented fund means it's nothing but you are having a unit in mutual fund. In a company now we call them as shares. When you invest in a mutual fund, it is called as units. Now, why it is called as equity oriented fund? That mutual fund, out of the money pool, majorly it invests in equity. That's why it is called as what? Equity oriented fund. Units of equity oriented fund. Then third one, business trust. Sir, business trust is a trust kind of thing only formed. You will be investing in the trust and trust will be allocating you units instead of shares. Now, what a business trust will do? In the name itself it is there. Sir, it's not charitable trust. It is business trust. So, this money will be used for business only. Does the trust will directly do business? No. What business trust will do now? It will create some other companies. But for the companies, capital will be provided by the trust. Understand, sir? Let's say some 10 people given money to me. I'm acting as business trust. Okay, I'm acting as business trust. Now, since they invested in me, I need to allocate something for them. Normally, in a company will give what? Shares. But I'm not a company, I'm a business trust. So, I'll be allocating units to them. Okay, now I have money. What to do? Sir, normal companies, they'll do business. But I'm a business trust. I'm not actually for the purpose of business. So, what I'll do? Sir, I'll identify mostly. I'll be investing in real estate related projects, infrastructure development related projects. Let's say I'll create a company X. This X company will lay national highways. Okay, so for laying the roads and all, it needs money, right? So I'll be giving money to that company, and that company has capital, and it starts laying roads and all. Now, what is the income for that company? Toll collections will be there to the company. Now, out of toll, that company will pay to me, and again, I'll pay back to the unit holders. Understand, sir? So, business trust directly will not do business. Business trust directly will not do business. Understand, sir? Business trust will float some more companies. Okay, those companies will do business. Or example, you know high-tech city building. So what is the high-tech city building, sir? It is a building constructed by government and will be given on rent to whichever company need it. That's what high-tech city. Okay, software companies, if they'll be actually struggling for infrastructure. They don't have good infrastructure. Now high-tech city is like a building which is constructed and will be given on rent. But that is constructed by whom? Government. Same as like that. Many private enterprises also has constructed buildings these days. Okay, like that. Okay, I'll form another company called Y. X is for roads and all. Y, I created one more company called Y. This Y will construct, like, let's say, some 25 floors building. Now this 25 floors building will be given on rent by Y. Y will be getting what? Rental incomes and all. Those rental incomes will be again given back to me, business trust. And business trust will be again giving it to the unit holders. Understand, sir? Sir, you might have a question. Sir, straight away you can invest in company now. Yes, that also can be done. That also can be done. But here there is no double taxability, sir. Sir, what me as a business trust doing? If company gets income, I'll take that income and again I'm giving it to the unit holders. Okay? So I'm just acting as a pass-through status. In between the company and the unit holder, I'm acting as a bridge. So business trust doesn't have any taxability because I'm just acting as a pass-through status. What are the incomes comes to me and again I'm giving it back to the unit holders. So business trust is exempted. Okay. Again it will come, sir, in assessment of companies. But now coming back to the point. Capital gains, long-term capital assets related. 3 assets we are talking. What are those 3 assets? Listed equity share, units of equity oriented fund, units of business trust. Okay, sir, listed equity share, it was listed in NASDAQ. NASDAQ means New York Stock Exchange. Okay, will it be counted? No, it should be listed in India. Okay, listed equity shares were in India, units of equity oriented fund, units of business trust. These 3 are one category of assets, and on them STT also should have been paid. If listed in India, now obviously STT might have been paid. STT means what? Securities transaction tax. Okay, listed equity shares, units of equity oriented fund, units of business trust. These 3 long-term capital gains, then they are covered under 112A. 112A. Then the tax rate is 12.5% in excess of 1,25,000. 12.5% in excess of 1,25,000. Now you will have a question. Sir, this 1,25,000 straight away exemption. No. Like slab rates. First 1,25,000, 0%. Above 1,25,000, it is like how much? 12.5%. Sir, what is the difference between taking as exemption and this way? Sir, if you take it as like exemption, while doing total income also, you will take, let's say you have long-term capital gain of 5 lakhs. If first 1,25,000 you consider as exemption, means straight away for taxability, for total income also, you will take 3,75,000 only. Are you able to understand my point, sir? Sir, under the head capital gains, how much income we should show? It is actually 5 lakhs. We should show 5 lakhs. If you taken, or if you consider the first 1,25,000 as exemption, you will take only 3,75,000. Then your gross total income will be wrong, net total income will be wrong. So that's why this first 1,25,000 is not exemption. It's like 0 rate. Okay, above 1,25,000, it is like taxable at 12.5%. Understand, sir? 112A assets. Sir, from here on, these 3 assets will be referring as 112A assets. What are 112A assets? Listed equity shares, units of equity oriented fund, units of business trust, listed in stock exchanges of India, and STT has been paid. What is the tax rates? 12.5% in excess of 1,25,000. Okay. Rest all the other long-term capital assets, related capital gains are covered under 112. All the other long-term capital gains are covered under section 112. They also taxable at 12.5% only. They also taxable at 12.5% only. There is one exception, sir, for this 12.5% for resident individuals that we'll discuss in capital gains chapter. In general, 12.5% only. On all the other long-term capital assets or the long-term capital gains, the tax rate is 12.5%. Now, short term. Even in short term also, these three assets will separate. What are those three? Listed equity shares, units of equity oriented fund, units of business trust. These three are covered under short term. If they are short term, covered under 111A. Covered under 111A. Then what is the tax rate, sir? Tax rate is 20%. 20%. Sir, the same three assets, long term means what is the tax rate? 12.5% in excess of 1,25,000. Short term na 20%. Okay. Now we are having fourth one, sir, other short term capital gains. This is very much important, sir. Other short term capital gains are not special rate. Other short term capital gains are chargeable to tax at the normal slab rates only. Other short term capital gains. So out of 4 capital gain incomes, 3 only special rates. The fourth one is again general rate only. The fourth one is general rate only. Okay. So the special rate incomes are 112A. What is 112A? Listed equity shares, units of EOF, units of business trust, long term. 112, other long term capital gains. 111A, short term, listed equity shares, units of EOF and units of business trust. These three are only special rates. If it is 111, 111 means what? Other short term capital gains. They are chargeable to tax at normal rates only. Clear, sir? Okay. Then we have other special incomes like casual income. What is called casual income, sir? Casual incomes means betting, gambling, lottery, card games, puzzles. All these are covered under casual incomes. Okay. So they are chargeable to tax at a flat rate of 30%. 30%. 115 BB. Then net winnings from online games. They are covered under 115 BBJ. They are taxable at a rate of 30%. Then undisclosed incomes. What are called undisclosed incomes, sir? Sir, okay, let me finish that concept also. Undisclosed incomes. Undisclosed source of incomes. Even in the book also it will be there. Undisclosed source of incomes. Sir, undisclosed source of incomes means these are called undisclosed source of incomes. Sir, in our account, there are certain cash credits. I mean, there are credits. Okay, you might have some 5 lakhs credit, 10 lakhs credit, 20 lakhs, 30 lakhs, like that money got credited into your account. Now, obviously, department asked you explanation. Why you received this much money? What is the source? What is the nature? You couldn't explain. You couldn't explain. Maybe it is bribe. Maybe it is something illegal thing. Okay, you cannot explain. So then what? Either you can't explain, nor the explanation provided is not satisfactory. Then such cash credits are treated as what? Undisclosed income. Second one, you have some properties. You have some properties, land, building, etc., gold and all. Then obviously they came for search and they asked for the documents. You provided documents. Okay, everything, you are only the legal owner. But they asked, how do you got money to purchase them? What is the source to purchase all these properties? You don't have any proper source. Sir, proper source, na, every year you should have paid income tax, right? Every year you are showing nil return. Okay, even if you are salary, na, you are claiming everything as a refund. But here if you see now, you are having so many buildings and properties. So they are asking simply, how do you got money? If this much money you got now, you might have paid more income tax, but you didn't pay that much income tax. Then how you got money? You didn't explain the source, nor the explanation is not satisfactory. Again, undisclosed. That investment part, let's say you have some 50 crores of investments. 10 crores you could explain. 40 crores related source, nature you couldn't explain. Then that 40 crores is what? Undisclosed source of income. Third one, unexplained money, bullion and jewelry. Same as like investments, they directly found money in possession with you, or they found gold with you, they found jewelry with you. Again they'll ask, why you got this much money, or how you got this much gold, how you got this much jewelry. Again you don't have proper explanation or the explanation is not satisfactory. Then fourth one, unexplained expenditure. Unexplained expenditure. You also inspired with Vijay Devarkonda and Rashmika wedding. Okay, so what you also did? Okay, they are like doing this, like in AP, Telangana, they have identified some temples where food donation and all they are doing now. So you inspired and you started food donation in much more bigger temples like Tirumala, Tirupati. Okay, then such kind of Ayodhya, Kasi, these kind of big temples and all you are doing. So okay, the total expenditure itself 30 crores for a marriage. Then obviously they'll ask like what? How you got for this 30 crores? From where you got this 30 crores? What is the nature source of this expenditure? If you explain, fine. Otherwise, that expenditure, already money spent, but still it would be treated as what? Undisclosed source of income. Then, amount of investments not fully disclosed in books of accounts. Sir, actually market value of the investment is 50 crores. In books you are showing it as 5 crores and for 5 crores you are explaining. But the market value of the investment is 50. So actually you purchase for 50 only. But in books you are recording for 5 crores and you are showing the source of income for 5 crores. In such cases also, the other 45 crores, how you paid? They'll ask the source, nature. If you couldn't explain, that is also undisclosed source of income. The last one, sir, amount borrowed or repaid through hundi. Okay, amount borrowed or repaid through hundi. Let's say, sir, hundi means it is much more earlier version of promissory note. Nothing but on a white paper, two people write. Okay, X has given me 5 crores. Okay, you just write like such kind of statement and both parties will sign. Such kind of documents are called as what? Hundi document. Sir, you have 10 crores with you. Income tax people came and they searched the whole premises and they found 5 crores. Obviously, they'll ask how you got this 5 crores. You are saying like, sir, my friend Y given me the loan this 5 crores. See, this is the document. But that hundi document will not have any validity. If it is a real loan, you might have taken through bank account. Since you didn't taken it through the banking routes, only by way of cash, and the supporting document is only a hundi document, that also will be treated as what? Undisclosed source of incomes. All these undisclosed source of incomes are taxable at a rate of 60% plus separate surcharge, sir. Sir, irrespective of the total income slabs and all, on undisclosed source of income, surcharge will always be 25%. Sir, you have only 5 lakhs undisclosed income. On 5 lakhs, 60% tax rate, surcharge 25%. Okay, plus cess again at a rate of 4%. So altogether, effective rate comes to how much, sir? 78%. Tax rate 60. On 60, if you apply 25%, how much? On 60, 25%, 15. Total 75. On 75, 4% cess, 3%. Okay, so total if you do, your effective tax rate will be how much? 78%. Okay, so on undisclosed source of incomes, only tax rate na 60%. By adding surcharge and cess, everything, effectively the tax rate will go to 78%. Then, transfer of virtual digital assets. What are called virtual digital assets? Cryptos, cryptocurrencies, bitcoins. Okay, all these will come under what? Virtual digital assets. If you have any gain on transfer of virtual digital assets, they are taxable at a rate of 30%. The last one, tax on carbon credits. Sir, what is carbon credits? To limit the pollution. For every factory, they'll give a limit of carbon credit. Okay, maximum sir, carbon credit is nothing but when a factory is running, they limit smoke. Smoke is nothing but carbon dioxide only. Okay, for that they'll put a limit. Okay, let's say one company has exhausted the carbon limit. It cannot stop its business, it cannot shut down the factory, right? So what it will do, from other company, if they are having surplus credit, let's say, sir, okay, and I don't know exactly what terms they use, but let's say they have some 100 points related. One company already reached the 100 limit, whereas other companies, they have efficient systems and all, machines and all, so their emissions are only up to a level of 20. So they have surplus of 80 points. So these 80 points also they can sell to some other companies which need carbon credit. Okay, so when they are transferring or when they are selling carbon credits, they are taxable at a rate of 10%. Okay, so these are the major special rate incomes applicable to residents. For non-residents, sir, there are again separate special rate incomes and all that we'll discuss again in the non-resident chapter. These are general residents related special rate incomes. Okay, so what are those? 112A tax rate 12.5% in excess of 1,25,000. 112 12.5%. 111A 20%. 111 normal rates only. Okay, then undisclosed source of income 60% plus surcharge 25 plus cess 4%. Virtual digital assets 30%. Carbon credit 10%. Then casual income 30%. Okay, online money gaming 30%. Okay, so now we are going into the concept rebate. Rebate under section 87A. Rebate applies to resident individual. Rebate applies to resident individual alone. Okay, and rebate applicable under both old regime and even under default regime. Old regime simple, sir. First, under old regime, rebate applicable only when the total income is within 5 lakhs. Total income means which total income? Net total income is within 5 lakhs, then rebate is applicable. What is the amount of rebate? 12,500 or tax payable, whichever is lower. 12,500 or tax payable, whichever is lower. And it can't be claimed on 112A income. Only on 112A. That means on 112, 111A, on all the other special rate incomes also you can claim, except on 112A. Which regime? Old regime. Okay. And marginal relief under rebate concept is not applicable, sir. So rebate under old regime simple. When the total income is up to 5 lakhs, rebate is 12,500 or tax payable, whichever is lower, and can't be claimed on 112A income. Can't be claimed on 112A incomes. Okay. Here. Default regime only, sir. There's an amendment. Second amendment. First amendment is what? Slab rates. Second amendment is there in rebate. Under default regime 115 BAC. Under default regime 115 BAC, the rebate applicable total income limit is 12 lakhs. I mean, rebate can be claimed up to the total income is 12 lakhs. What is the amount of rebate? 60,000 or tax payable, whichever is lower. Rebate amount is how much, sir? 60,000 or tax payable, whichever is lower. And this point is also new. Previously, it was not there that rebate cannot be claimed on special rate incomes. But from Finance Act 2025, they clearly said like rebate can't be claimed on special rate incomes. Only on general rate taxable incomes only we can claim rebate. Understand? So what is the amount of rebate, sir? 60,000 or tax payable, whichever is lower. Total income should be within 12 lakhs. Rebate cannot be claimed on special rate incomes. But the next important point is there is a marginal relief kind of rebate also introduced. It was there even in the last attempt also, but now with the numbers change, there is a marginal relief kind of rebate also. Same steps, sir. How do we calculate marginal relief when there is surcharge? Same here also, same kind of steps. Okay. Let's say for example, sir. Sir, with this marginal relief concept, what happens means, sir, here what we said, total income up to 12 lakhs only rebate applicable now. So we think like above 12 lakhs rebate is not applicable. But because of this concept of marginal relief on rebate, sir, actually there is no word referring it as marginal relief. But it is similar to that of marginal relief concept only, na? That's why I am referring as rebate marginal relief. Okay? Otherwise, this also they'll call it as what? Rebate only. Okay? So rebate in an extended cases. What is the extended cases? Even when your total income is above 12 lakhs also, sometimes you'll get rebate. Okay? How do we should check? When the actual total income is nearer to the rebate limits. Sir, for marginal relief, what we'll do? Total income is nearer to the surcharge limits. Here, the total income is nearer to the rebate limits. Let's say 12 lakhs. 12 lakh 10,000, 12 lakh 20, 12 lakh 30, 12 lakh 40, 12 lakh 50 till 12 lakh 70. If it is closer to the rebate limits, then again you should check for the rebate on or rebate something like marginal relief. Okay, what are the steps? First, step 1, calculate the tax on the actual total income. Okay, sir, for example 12 lakh 50,000. Okay, roughly, sir, calculate everybody. So just with calculators it won't work. Take a rough page. Step 1, that number you should write. Step 2, that number you should write. Okay, only we can follow. Then only we can follow that. Otherwise, by the time you complete step 2, you will forget step 1 number. Okay, example we are taking is for what? 12 lakh 50,000. 12 lakh 50,000. Now step 1, calculate tax on 12 lakh 50,000. Roughly, sir. You need not to do completely also, roughly. Step 1, compute tax on 12 lakh 50,000. Step 1, compute tax on 12 lakh 50,000. Because the given total income is 12 lakh 50 only. Step 1, compute tax on 12 lakh 50,000. 2,500. You will not get rebate, no. About 12 lakhs, you will not get rebate. Will you get rebate? No. 67,500. Cess need not to calculate, sir. Everybody got the same answer. 0 to 4 nil. 4 to 8 lakhs. 4 lakhs into 5%, 20,000. 8 to 12 lakhs. 10%, 4 lakhs into 10. 40. So total now, by now, 60,000. About 12 lakhs, how much is there? 50,000. 50,000 into 15%, which is 7,500. So total 67,500. Step 1. Okay. Now step 2. What is the rebate limit? 12 lakhs. Okay. The total income, rebate total income limit is how much? 12 lakhs. On 12 lakhs, what is the tax? 60,000. If it is only 12 lakhs, you can claim even rebate. If it is only 12 lakhs, you can claim even rebate. So what is the tax payable? 0. Understand, sir? Step 2, you should, sir, under marginal relief, what we did step 2? Computed the tax on nearest surcharge limit. Here, rebate limit. What is the rebate limit? 12 lakhs. So on 12 lakhs, if you compute tax, exactly 12 lakhs, now you will get rebate also. So the tax payable will always become what? 0. Sir, for rebate, always step 2 will be 0 only. Because there is only one rebate limit, 12 lakhs. On 12 lakhs, always the tax liability will be 0 only. Because 60,000 and 60,000 you can even claim as rebate also. So step 2. Sir, are you able to understand, sir, what is step 2? Step 2, we are calculating tax on the rebate limit. Rebate limit. Okay. Step 1, we got how much? 67,500. Step 2, how much we got? 0. Now step 3, difference between the actual total income and the rebate limit we have taken. Rebate total income limit we have taken. 50,000. Because the actual total income we taken is how much? 12 lakh 50,000. In step 2, how much we have taken? 12 lakhs. Okay, what is the difference between them? 50,000. Now again do 1 minus 2 minus 3. 17,500. That 17,500 is the rebate applicable now. Okay, marginal relief kind of rebate applicable now. Sir, why this concept? Simple concept, sir. I explained at the time of surcharge, right? The incremental tax is more than that of incremental revenue they made. Sir, here he made 12 lakh 50,000. If he made, okay, see, 12 lakhs na tax liability is 0. 12 lakh 50,000 na tax liability is how much? 67,500. For 50,000 incremental revenue, he is getting 67,500 incremental tax, which they thought it is not correct. Sir, understand? Situation, step 1, consider as one SSE. Step 2, consider as a different SSE. If you are having 12 lakhs as income, 0 liability. 12 lakh 50,000 na you should pay 65,000. How much you earned extra? 50,000 you earned extra. For earning 50,000 extra, you are ending up with paying 67,500. So for 50,000 income, you are paying 67,500. That's why what they said, to the extent of extra income only, the tax also restricted. The balance is given as rebate only. The balance is given as rebate something like of marginal relief. So how much they'll get, sir? Marginal relief equals to 1 minus 2 minus 3, which is 17,500. So the final tax applicable is how much? Step 1, 67,500 minus this rebate, 17,500. If you subtract, you will get 50,000 as the final tax liability. 50,000 as the final tax liability. So are you able to understand? Sir, either at marginal relief concept or here also, if 1 minus 2 minus 3 is negative value, there is no marginal relief. Only if it is positive value, we will do marginal relief. 1 minus 2 minus 3, if you do, and if you got a positive number here, that number is what? Rebate or marginal relief. If it is a negative number, then consider like there is no marginal relief at all. Only if the value is positive, we'll take it as marginal relief. Okay. Now do this example, sir. Same way, 12,70,585. 12,70,585. Everybody do it. 12,70,585. One, two, three, everything you should do separately, sir. 12,70,585. ₹2. That means this is the last amount on which we can get rebate. Because here ₹2. If you increase much more, then the ₹2 also will not be there. So rebate applicable, I mean this marginal relief kind of concept is applicable only to the extent of 12,70,585. Sir, again, this number is not given in act. We checked like till what extent the rebate might be applicable. So if you check, keep on going now, 12,70,585. Afterwards, if you do, let's say you try 12,70,590, you will not get rebate. Understand, sir? So see how much, sir? On 12,70,585, what is the tax liability? 70,587. Correct only, na? Step 2 on 12 lakhs, 0. Because 60,000 tax, rebate 60,000, 0. Step 3, difference between 12,70,585 and 12 lakhs. How much, sir? 70,585. So the marginal relief is how much? 1 minus 2 minus 3, it is what? 2. Okay, then the tax payable is 1 minus 4, it is 70,585. Sir, if you increase the number and go, then it will become what? Negative. Okay, we will try that one also. Okay, compute total income assuming 13 lakhs. Total income 13 lakhs. Try at total income 13 lakhs also. How much? Negative 20. Negative now there is no marginal relief or rebate at all. Vaishnavi, చేస్తున్నాం అమ్మా. Sir, on 13 lakhs, what is the tax liability? 75,000. Step 2 on 12 lakhs, 0. Step 3, 12 lakhs and 13 lakhs difference now, 1 lakh. So 1 minus 2 minus 3, 75 minus 1 lakh if you do, you will get negative 25,000. If it is negative, there is no rebate kind of. So here, no rebate applicable. The tax payable will be the original step 1 amount only, which is how much? 75,000. Understand, sir? Okay. So then we'll be solving certain basic examples, sir, on tax computations only. Compute tax liability of Mr. Sanjay. Sir, everybody, you should try on your own only. I'll not be explaining anything. Compute tax liability of Mr. Sanjay, age 20 years, has the following incomes. Compute tax under both the regimes. Okay, first tell me under default regime. His income from house property 3 lakhs. Sir, computed only. You need not to worry about again standard deductions and all. PGBP 2 lakhs. Long term capital gain under 112A, 2 lakhs. Short term capital gain, 1 lakh. Lottery income net of TDS, 70,000. First tell me what is this total income. First tell me total income, then we'll go about tax liability. First tell me his total income. 9 lakhs, sir. Wrong. How much? 5 lakh? 70. Total income 5 lakh 70. You said 9 lakhs. Then, Vaishnavi, 9 lakhs. 5 lakhs. Okay. 10 lakhs. 9 lakhs. Okay. $10 lakhs. Okay. 8 lakh 70,000. Okay. Mahak. 8 lakh 70. See, first understand whether it is normal rate income or special rate income, first it will become part of total income. Okay. Only at the time of tax calculation, we'll look them separately. Okay. So, for the purpose of total income, sir, total income means what, sir? Total of all the incomes. Total of all the incomes, you should take headwise. That's what. Okay. So, you should do the total of all the incomes. Okay. So, house property 3 lakhs, done. PGBP 2 lakhs 5. Long term capital gain is also income. Take 2 lakhs. How much? 7 lakhs. Then long term capital gain 1 lakh, 8 lakhs. Then lottery income, sir, it is net of TDS. Net of TDS means what? Already after deduction of TDS, we should take gross amount. Sir, this particular point in CMA Inter IFOS chapter, many times this question will be there, if you have remember. Okay. The majority points they'll give like this only. Lottery income only they do. Lottery income or dividend income. Only for these 2 points they'll do. They'll do net of TDS amounts. You should do gross amounts. Okay. So, on lottery income, I already said, what is the tax rate? 30%. TDS rate is also 30% only. So, after deduction of 30% TDS, it is 70. If you took gross amount, how much? 1 lakh. So, total it would be 9 lakhs. Okay. The total income will be 9 lakhs. Okay. 3 lakhs, 2 lakhs, 3 lakhs, 1 lakh. Gross total income is 9 lakhs. Since there are no chapter 6A deductions, net total income is also how much? 9 lakhs. Now, compute tax under default regime. Under default regime, compute tax on this. Under default regime, compute tax on this. Sir, can we do tax on the total 9 lakhs in single go? In one go, we cannot do. Why? Because there are normal rate incomes, special rate incomes. So, first we should calculate on special rate, first calculate on normal rate incomes only. First calculate on normal rate income. How much, what are the normal rate incomes are here? House property, normal rate. PGPP, normal rate. Capital gains, 112A is also special rate. 111A is also special rate. Lottery income is also special rate. Okay. So, what is the normal rate income we are having, sir? 5 lakhs. Out of 5 lakhs, basic exemption limit we can claim 4 lakhs. So, balance 1 lakh into 5%. How much? 5,000. Okay, done. Then, special rate incomes, every income separately we'll do. 112A, 2 lakhs. But excess of 1,25,000 is only taxable at a rate of 12.5%. So, 75,000 into 12.5%, which comes to how much, sir? 9,375. Then 111A income, how much? 1 lakh. 111A incomes are taxable at what rate? 20%. So, 1 lakh into 20%, 20,000. Then lottery income 1 lakh, taxable at 30%. So, total 30,000. So, if you do the totals are how much? 64,375. Okay. Now, sir, what is the total income he is having? 9 lakhs. Sir, till here we'll do, then we'll forget about rebate. He'll get rebate also. Why? Total income is less than 12 lakhs. How much is the rebate available? 60,000 or tax payable. What is the tax payable, sir, here? 64,375 or 60,000, whichever is lower. So how much is the rebate applicable? 60,000. Okay, any point you are missing? Rebate under default regime is not applicable on special rate incomes. So the general rate incomes related tax is only 5,000. So you can claim rebate only to the extent of 5,000 only. Okay, na sir? In classroom you will understand, but all these points striking in exam is only task. Okay, rebate under section 87A can't be claimed on special rate incomes, which is how much? 5,000. Okay, then the tax is how much? 59,375, because rebate you subtracted. On that cessate rate of 4%, 2,375. Total tax is how much? 61,750. But again you will not pay 61,750. Why? Already 30,000 TDS deducted. On what? Lottery income. So why again that 30,000 you will pay? So subtract TDS 30,000. The final tax liability is 31,750. Final tax liability is how much? 31,750. Sir, are anybody having doubts? You could ask me now only. Okay, then solve and tell the final answer under old regime. Okay, total income also, till total income I am showing here. Now calculate and tell the final tax payable under new regime. Under old regime. Default regime we already calculated. Now I want under old regime. See, if you are looking for online, if you are looking for December 2026 regular classes, you can take the recorded classes which were already there. Okay, for June 2026 and December 2026 there won't be any changes. It will remain the same. So that classes you can take. If you wanted to attend the live batch only, then live batch will start only in April month. For CMA final DT, December 26 exclusive. And then it takes time also. I'll take that April, May until June 20, I'll take that batch. If you wanted to listen classes little quicker and you want to complete before that time, then you can go for the recorded classes which were already available. $41,875. Everybody? I know, will not get the same answers. Okay, how many times we solve the basic questions? At least. If there are like 100 numbers, 100 students, then at least I can see 7, 8 different answers will be there. How much you got? 41,875. Everybody. 41,875. What is her name? Your name? Cherishma. Okay. ఎంత వచ్చింది సార్? రిబేట్ వస్తుందా రాదా అని డౌట్ ఉందా? ఓల్డ్ రెజ్యూమ్, వాట్ ఈస్ ద రిబేట్ టోటల్ ఇన్కమ్ లిమిట్? 5 lakhs. So rebate is not available. Okay, so look at the answer, sir. Net total income 9 lakhs. Tax on 5 lakhs. Sir, tax on 5 lakhs. Normal rate incomes. First 2.5 lakhs nil, and on balance 2.5 lakhs, 5%. It is how much? 12,500. 12,500. Then 112A income, same amount, sir. In excess, because special rate incomes, the access will be same. Almost, we need not to do again also. Except this first one, the rest 3 will remain same. Okay. 9,375, 20,000, 30,000. If you add 71,875, rebate will not come. Why? Because total income is in excess of 5 lakhs. So rebate not applicable. Okay. So then cess at a rate of 4%, 2,875. Tax will come to 74,750. TDS if you subtract 30,000, then the tax payable is 44,750. You guys said something 41. Where any mistake I did? Okay, you did mistake. Okay. Cess at a rate of 4%. Thank you. Love you too. Sir, able to solve? Okay. So, but these are very important, sir. Question number 3A is based on this only. We'll have question number 3A. Okay. Tax planning. How the question is being asked? They use certain incomes. You should compute under both old regime and default regime. That also from individual perspective only. 3B is from company's perspective. And then where else these are needed? For advanced tax chapter. Okay, advanced tax you need to pay for the 234A, B, C interest calculations. First advanced tax you should compute, right? For computation of tax, all these things you should know. Then DTA, double taxation avoidance agreement. Then again you will calculate the tax computations and all. Okay, so 3 7 marks questions are linked with the basic tax computations only. If you are doing mistakes in those 3 chapters, mostly sir, okay, always there is a 7 marks question from DTA relevant to this computations and all. And then again, tax planning, always there is a 7 marks question. And then advanced tax, sir, once in like every 3 attempts, 2 attempts they are asking from, out of 3, 2 attempts they are asking from advanced tax. So these 3 simple 7 marks questions, if you are doing mistakes, then the problem is with your basics, first chapter basics only. Okay, you cannot remember rebate, you cannot remember the special rate incomes, these points only. Then sir, we are moving on to tax rates applicable to companies. Sir, again, companies also has default regime and sir, for individual new regime is the default. For companies, old regime is the default regime. Understand, sir? For individuals, HUF, AOP, BOI, AJP, new regime has been made as the default regime. But for companies, there are new regimes also, 115 BA, BAA, BAB. But those are not default regimes. The original old regime is only the default regime. Okay? So, what is the tax rates applicable to companies? If it is a domestic company, and the turnover in previous year 23-24 is within 400 crores. So this is an amendment. Previously it used to be 22-23, now 23-24. Next year also there will be amendment there. It will become 24-25. Okay. Turnover in previous year 23-24 is within 400 crores. Then the tax rate is 25%. Above 400 crores, 30%. Okay. Tax rates applicable to domestic companies are what? 25% and 30%. When 25%? Turnover within 400 crores, 25%. Turnover above 400 crores, 30%. Okay. Sir, in majority questions, they will not give turnover. Then how do we assume? Anything you can assume, sir, but safely assume always 30%. Instead of 25%, assume 30%. Okay. Then surcharge rates applicable to companies. When the total income is up to 1 crore, nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. 1 crore to up to 1 crore total income, nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. Okay. Then optional regime, sir. Sir, companies optional regimes, I don't want to discuss now also. Okay, just I'll tell the tax rates alone. Surcharge rates also I will not discuss now. We'll discuss anyhow these three in assessment of companies chapter, detailedly. Okay, here we just took the tax rate and surcharge rates. Okay, but in assessment of companies, we'll detailedly discuss why 115BA. What are the conditions to be satisfied to be under 115BA? And what are the conditions to be satisfied to be under 115BAA? And what are the conditions to be satisfied under 115BAB? Okay, so 115BA, the tax rate is 25%. BAA na tax rate 22%. BAB na tax rate is 15%. Sir, if there are no conditions and restrictions, everybody will go for 115 BAB only, 15%. What's the purpose of other two? BA and BA are completely irrelevant only, right? But there are certain conditions. Some will become eligible only for BAA, some will become eligible for BAB also. Okay? All the clear distinctions will learn in assessment of companies chapter, sir. So, tax rates alone will remember. Forget about surcharge rates also. 115 BA na 25%, BAA na 22%, BAB 15%. Foreign company. For foreign companies, the tax rate is 35%. Domestic companies, how much, sir? 25 and 30. When 25? 23, 24 turnover is within 400. Sir, again, this you might forget in exam, sir. Here we are referring to turnover. At every place we'll think of total income. But here we are thinking of what? Turnover. Turnover in previous year 23-24 is within 400 crores, 25%. Above 400 crores, 30%. Then foreign companies, irrespective of their turnovers, the tax rate is how much? 35%. Surcharge rates. Up to 1 crore, nil. Total income up to 1 crore, nil. 1 crore to 10 crores, 2%. Above 10 crores, 5%. Up to 1 crore, nil. 1 crore to 10 crores, 2%. Above 10 crores, 5%. Okay. Then tax rates applicable to cooperative societies. Tax rates applicable to cooperative societies. Sir, when the total income is up to 10,000, the total income is up to 10,000, then the tax rate is 10%. 10,000 to 20,000, 20%. Above 20,000, 30%. Up to 10,000, 10%. 10 to 20, 20%. Above 20, 30%. 0 to 10, 10. 10 to 20, 20. Above 20, na 30%. Surcharge rates, same as like domestic company. Up to 1 crore of total income, nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. Okay, cooperative societies. Just like as companies, even for cooperative societies also there are optional regimes. 115 BAD and BAE. Sir, look at the special rate sections. 115 BA companies, BAA companies optional regime. 115 BAB, I mean new regime. Instead of optional regime, it is better to call it as new regime. 115 BA, new regime companies. BAA, new regime companies. BAB, new regime companies. BAC, new regime individuals, HUF, AOP, BOI, AJP. Then BAD, cooperative societies. BAE is also for cooperative societies. 115, 115, BA, BAA, BAB, BAC, BAD, BAE. Okay. Sir, do we need to remember section numbers? Yes, na will be. How do we remember them? Okay, always like in question, compute under 115 BAC, they'll say. Then it is obviously what? Default regime or the new regime. So that you should identify at least. Okay, you need not to memorize and by heart, but by reading multiple times, at least you should know. Okay, these means new regimes or this means old regime, like that you should understand. Okay. But in exam, sir, even if you don't quote any section number also, it's not a problem. Okay, when you are doubt with, sir, some people will have problem with numbers only. They'll know the conditions, they'll remember the limits also, but that number, section numbers only, they'll have doubt. Is it like subsection wise? They'll have some doubts. When you are in doubt, never quote a section number. Okay, when you are in doubt, it's always wrong. Okay, if it is correct, then you will not have doubt. So that's why when you are in doubt, don't quote section numbers. It will not, the examiner, the evaluator will not reduce marks just because you didn't quote a section numbers. He'll reduce marks if you quote a wrong section number. Okay, when you are sure, okay, this is only, then only quote section numbers. Otherwise, leave. You just use the word as per provisions of income tax. Sir, 85s, 90s will not come without section numbers. But if you are trying for 85s, 90s and all, then surely you should remember even the section numbers. For 60, 65, up to 70 range also, even without section numbers also, if you know the concepts properly, how to apply those things properly, then you will get 65s and 70s also. Okay, I am saying, sir, I never quoted section numbers. In my CA or CMA, I never quoted because I always worry about maybe if I quote a wrong section number. Okay, very rarely if I exactly know that. Okay, for law, I by-hearted section numbers. For company law, starting from 120, section 120 till 175, I wrote all the section numbers on a paper and then I by-hearted. Okay, every day morning my job is that one only, like for first 20-30 minutes I'll read every section, because that time section 120 series na, like dividend, books of accounts, then directors, okay, all this part I used to, in between audit also will be there, accounts and audit 130 is related. So all these section numbers I need to by heart, and then I quoted those section numbers alone. For income tax, GST, I never try to by heart also. Whatever the section numbers, I know exactly. Maybe somewhere like TDS. Okay, those section numbers only I referred, rest all I didn't quote it. Okay. Okay, if you, sir, some people, they need not to put extra effort to remember section numbers. Generally, when they are reading also, they could remember. Maybe listening to the class multiple times, or listening to marathon, or listening to, or reading to the revising number of times. Without any extra effort, they'll remember section numbers. Then no problem at all. You need not to put extra effort to remember section number also. Okay? Some things has to be remembered, sir. Sir, I always cannot say long listed equity shares, units of equity oriented fund, units of business trust. So simply I'll refer as what? 112A. That section number we don't have any choice. You should remember 112A, 111A. Okay, same asset short term na 111A, same asset long term means 112A. Okay, that because we are referring them itself with the section number only. So no other choice there. So cooperative societies, sir, optional regime 115 BAD. What is the tax rate? 22%. Who can go for 115 BAD? If they are not eligible for 115 BAE, then they will come for 115 BAE. Okay, who can go for 115 BAE? If it is a cooperative society which is in manufacturing and registered on or after 1st April 2023 and commenced its business before 31st March 2024, that means effectively it has only 1 year period. In that 23-24 financial year, if it has started a cooperative society which is into manufacturing, then they have the benefit of tax rate how much? 15%. Surcharge fixed. How much ever is their total income, surcharge would be 10%. No slabs and all applicable. Up to 1 crore, 1 crore to 10 crores, all that not applicable. Fixedly surcharge is 10%, tax rate 15%. If any cooperative society not eligible for this, maybe it's not into manufacturing, then what it can choose? It can go for 115 BAD, tax rate is how much? 22%, and surcharge rate is 10%. 22% tax rate and surcharge rate is 10%. Okay. So see, sir, 115 BAC is the default regime for individual, HUF, AOP, BOI, AJP. Default regime. New regime only, but that is the default. 115 BA, BAA, BAB is for companies, optional regime. That also for domestic companies only. BAD, BAE is for cooperative societies, and these are optional. So for cooperative societies, default regime is this. Up to 10,000, 10%, 10,000 to 20,000, 20%, above 20,000, 30% is the default one. This 22% and 15% are optional. For companies, default is what? 25% or 30%. Optional is what? BA, BAA and BAB. BA na 25%. BAA, 115 BAA na 22%. BAB, 15%. Then, tax rates for firm including LLP and local authorities. For firm and local authorities, the tax rate is 30%. What are the surcharge rates, sir? Up to 1 crore nil. Above 1 crore straight away 12%. Sir, I didn't mention marginal relief at the place of companies and all. Doesn't mean there is no marginal relief. Marginal relief concept will come for local authorities, companies, domestic companies, foreign companies. Okay, for all of them, marginal relief concept is applicable. Okay, steps are same. Same steps. Step 1, computation of tax plus surcharge on given total income. Step 2, nearest tax plus surcharge on nearest surcharge limit. Step 3, difference between the total income and the surcharge limit we have taken. Step 4, 1 minus 2 minus 3 is nothing but the marginal relief. Then on all the places, sir, wherever there is tax liability, we should apply cess at a rate of 4% irrespective of the type of income, irrespective of whether he is individual, HUF or whatever the category of person is, cess will always be there, health and education cess at a rate of 4%. Okay, so now understand tax how we are calculating. Out of the total income, if there is both normal rate income and special rate income, first we are calculating tax on what? Normal rate incomes or special rate incomes? Normal rate incomes we are calculating first. First compute tax on normal or general rate incomes you compute first. Then you calculate tax on what? Special rate incomes. You got the total tax liability. Then you check for surcharge applicability or rebate applicability. But understand, sir, surcharge and rebate will not come simultaneously. Why? Rebate will come mostly up to your total income is 12 lakhs. But whereas surcharge starts when the total income is above 50 lakhs. Both same step only, sir. Same line only. After tax computation, either surcharge will come or rebate will come. Rebate now will subtract, surcharge now will add. Okay? Surcharge or rebate. Then after doing surcharge and rebate, we'll go for cess. Cess at a rate of 4% on tax plus surcharge. On tax plus surcharge. Okay. Then the last one, sir, with respect to tax computation, there are other points also. Rounding off. What is rounding off? Rounding off, sir, 288A and 288B. Either the total income or tax payable. Total income means what, sir? Net total income or the tax payable shall be rounded off to nearest multiples of rupees 10. Rounding off has to be done to the nearest multiples of rupees 10. 7,85,423. 423 should be rounded off to 420. 428. 430. 425 again should be rounded off to 430. So 5 and above should be rounded off to next 10. Below 5 na rounded off to previous 10. I mean 420. Okay. Then when we are calculating advance tax under 234A, 234B, 234C, interest related, that time for the purpose of interest calculation. Sir, if you remember, interest rate is 1% there. 1%. So 1%, okay, even in multiples of tens if you take also, 1% if you do now, answers will come in points. Sir, let's say for example, you only do 55,550. 55,550 into 1%. 555.5. So we are getting what? Decimals. Okay, points. So they wanted to remove that. That's why what they are saying, like when you are calculating interest for the purpose of 234A, B, C, then the total incomes, okay, or the tax liabilities on which we need, not total income, the tax liabilities should be taken in multiples of 100 only. So what is the number I said, sir? 55,555. You ignore the fractions other than 100. So that means what we should take? 55,500 only you should take. 55 ignore. Okay, now calculate, sir. 55,500 into 1%. 555. We are not getting that decimals and all. That's why to ignore those decimals and all, under 234A, 234B, 234C interest calculation purpose related, the tax liabilities will take, na. It's not like rounding off to 10. You should ignore the fractions other than in 100. That means, sir, it's not rounding off, ignoring the fractions. Okay, why? Sir, rounding off now, what we'll do? 7,85,480, you might have rounded off to 7,85,500. But it is not about rounding off. If something is in fractions, not in a 100 multiple, then ignore that, not rounding off. So 4,85,423. This 23, ignore. So it is 7,85,400. 7,85,480. This is also in fractions only, not in 100 divisible by 100. So this 80 ignore. 7,85,400. 7,85,450. This 50 ignore. 7,85,400. Understand, sir? This is for what purpose, sir? Only for the sake of 234A, B, C interest calculation only. Are you able to understand? That also we use 1% per month. When we use 1% with the multiples of 10, we'll get decimals. Okay, to avoid that, they are taking in multiples of hundreds only. Yes, first to round off to 10, then ignore the fractions. See, you will not pay, see, the tax payable, if it is 7,85,423, you should pay 420 only. No. For tax payable, rounding off to 10. Yes. Yes, 1 mark will get deducted. You need to round off to the nearest multiples of rupees 10. They'll show their rounding off also. Okay, in certified copies, if you see there, 1 mark will get deducted if you don't round off also. Total income also has to be rounded off to nearest multiples of rupees 10, net total income, and even tax liability also has to be rounded off to nearest multiples of rupees 10. That is for sure. And this one also, here also you should take fractions of 100 on, I mean fractions ignore, take it only in 100, otherwise your answer will change. Okay, here also. Okay, and I don't think, let's say if it is like 8 rupees, sorry, interest will come in 220, 230, like that only 234 A, B, C interest will come. Within that numbers only 5 rupees, 6 rupees difference is there, na? I don't think evaluator will think whether, okay, he forgot only about rounding off, rest all he did correctly. That much attention will he give or not, I don't know. Okay, it's our, okay, for the purpose of 234 A, B, C I am talking. Okay, here at least maybe he can consider, because he can simply understand it's almost close, only he forgot rounding off. It depends on evaluator. There is no standard rule, I think institute will say. Okay, if now rounding off, now you subtract 1 mark. I don't think will there be any clear instruction from institute for that. Yes. This also we should remember that one. Rounding off is must. Okay, sir, you can take a break for 15 minutes. Then again we'll start at 8. It's okay. So to continue with our discussion, the next concept is about maximum amount not chargeable to tax. Maximum amount not chargeable to tax. For individuals, HUF, AOP, BO, AJP, maximum amount not chargeable to tax, no, nothing but the basic exemption limits. New regime 4 lakhs, old regime 2.5 lakhs. Sir, in new regime, irrespective of his age, senior citizen, super senior citizen, it remains to be 4 lakhs only, same. Whereas under the default regime, for normal individuals 2 lakh 50, resident senior citizens 3 lakhs, resident super senior citizens it is 5 lakhs. Firm company local authorities there is no such thing. And even for cooperative societies also there is nothing like that. Okay. Then the next important concept is about unexhausted basic exemption limit. Unexhausted basic exemption limit. This concept applicable only to resident individual and HUF. This unexhausted basic exemption limit concept applies only to resident individual and HUF. Rebate only to resident individual. But this concept applies even to both resident individual and HUF. And then this unexhausted basic exemption limit can be used only on incomes which are chargeable to tax under 111A, 112, 112A. Sir, 112A means listed equity shares, units of EOF, units of business trust, okay. 111A also same assets, but short term. 112 means other long term capital assets, okay. So unexhausted basic exemption limit can be used by resident individual and HUF. On what they can use? They can use on 111A, 112A and 112 incomes, okay. So now how do we calculate? From the basic exemption limit available, adjust the incomes that are taxable at normal rates. Okay, let me take an example, sir. Pravalika, age 45, has the following incomes. Pension income from salary, 2,40,000. Okay, she had some income, nothing but salary, which is taxable at what? 2,40,000, sir. Sir, assume this 2,40,000 after all standard deductions and all. Okay, the final taxable under the head is 2,40,000. Interest, 1 lakh. Long-term capital gain under section 112, 2 lakhs. Now tell me, out of these three, which are normal rate incomes, which are special rate incomes? Salary income, normal rate. Interest, normal rate. Whereas 112 income, special rate. Okay. Sir, first what we should do now? Total income we will do. What is the total income, sir? 3,40,000 plus 2 lakhs, 5,40,000 is the total income. Okay. First we will calculate tax on normal rate incomes or special rate incomes, sir? Normal or general rate incomes. Okay. So how much is there, sir? This general rate incomes 3,40,000 is there. But what is the basic exemption limit? 4 lakhs. Basic exemption limit is 4 lakhs. But we have incomes that could be adjusted with the basic exemption limit is only 3,40,000. After adjusting these incomes also, still we have a part in basic exemption limit. How much? 60,000. That 60,000 we call it as unexhausted basic exemption limit. Okay. The general rate or normal rate taxable incomes will adjust with basic exemption limit. After adjusting these incomes also, still if there is balance in basic exemption limit, that balance we call it as unexhausted basic exemption limit. See, from the basic from the basic exemption limit available, adjust the incomes taxable at normal rates. Sir, what is the basic exemption limit? 4 lakhs. From there, adjust the incomes taxable at normal rates. What are the incomes taxable at normal rates? 2,40,000 and 1 lakh. 3,40,000 adjusted. After adjusting, if any balance is there or not? Yes. How much? 60,000 is there. That is called as unexhausted basic exemption limit. Such unexhausted basic exemption limit can be adjusted with even 111A, 112 and 112A incomes. Okay. Sir, this unexhausted basic exemption limit can't be adjusted with any other special rate incomes. Only with these three special rate incomes like 111, 112A, 111A, 112 and 112A. And that also SSE should be whom? Resident individual or HUF. So now Gross total income 5 lakh 40, net total income also 5 lakh 40. Tax on normal rate incomes, basic exemption limit 4 lakhs. From there you adjusted income 3 lakh 40. So unexhausted basic exemption limit is how much? 60,000. So special rate incomes. Sir, what is the special rate income we are having? 2 lakhs. Under 112. It is taxable at what rate? 12.5 percentage it is taxable. So 2 lakhs into 12.5 percentage before you do, you can adjust this unexhausted basic exemption limit here because this is 112 income. If you adjust 60,000, then 1,40,000 into 12.5 percentage, it is how much? 17,500. Okay. Then, sir, total income 5,40,000 only. Rebate applicable or not applicable? This is default regime only. Rebate applicable up to 12 lakhs. But the tax element we are having is everything on special rate incomes only. On special rate incomes, can we claim rebate or we can't claim rebate? We can't claim rebate, so rebate is nil. Are you able to get my point, sir? Because this is there is no normal income related tax available. All the tax which we are having is related to special rate incomes only. On special rate incomes related tax, we can't avail rebate. So ignore rebate, then apply cess at a rate of 4%, 700, then the total tax will be 18,200. Total tax will come to 18,200. Sir, everybody are able to understand unexhausted basic exemption limit? Okay. Then revenue receipts versus capital receipts. Sir, this house property is only there. Now tell, from this house property, which incomes are called as revenue receipts, which incomes are called as okay, I understood your doubt. Sir, student is asking doubt like, sir, if it is 112A income, how it works? Sir, 112A income also, first subtract 60,000. 1,40,000 you will get. From 1,40,000, first 1,25,000 not taxable. The balance 15,000 is there, na? That alone is taxable at a rate of 12.5 percentage. Okay? First adjust unexhausted basic exemption limit. Then you claim that first 1,25,000 also as at 0 percentage. Balance 15,000 is only taxable at a rate of 12.5 percentage. Okay? I hope it is clear to you. Okay, from this house property, sir, what could be the revenue income, what could be the capital, what could be the revenue receipts, what could be the capital receipts? Rent is revenue receipt. Why we are calling it as revenue receipt? Recurring. Okay, every month you will be getting rental income. Okay, frequently, recurringly you will get income. So they are called as what? Revenue receipt. What is called capital receipt? When you sell the property, you will get capital gain. That itself is called as what? Capital receipt. But will it happen recurrently? You can sell this house only for once. Once you sell, it's not your property. Again, you can't sell. Right? So only for one time you can do. So capital receipts are not frequent. They'll come once in a while. Whereas revenue receipts are frequently. But sir, in our institute wordings also, they'll say like, capital receipts are not taxable, but revenue receipts are taxable. That is not true anymore. Why? Previously, capital gains are not taxable. 20 years, 30 years back. That's why mostly revenue receipts are only taxable, capital receipts are not taxable. But these days, capital gains also we are taxing, right? Okay, and previously at least indexation benefit used to be there. So majority of capital gain was exempted or not taxed by way of indexation benefit. Now indexation is also not there. So whatever the capital gain you have, that is fully being taxed. So it's not correct to say capital receipts are not taxable at all. Capital receipts are also taxable these days. But something like if you receive any loan amount, that is also a capital receipt. But loan and all is not taxable. Why? Because that is not even an income at all. Okay? So current situation, sir, in our book what we are having is like 25, 30 years back, those time related points. But exact scenario, na, capital receipts also, if they can be classified as income, if they fit into the definition of income, then they are taxable only, even though they are capital receipts also. Regularly you will receive rent, so they are revenue receipts, those are always taxable. Capital receipts on sale of capital gains, they are capital receipts, income and by way of sale of source of income. Okay, mostly exempted, but that's not true. Only for, since we cannot contradict with the points which are given in CA or CMA materials, we are writing it as mostly exempted, but actual truth is what? They are mostly taxable only. Then, sir, income earned in previous year is accessible to tax in which year? Assessment year. Sir, assessment means what? Tax payment or tax computation? Tax computation and finalization. Okay, it's not about tax payment. Okay, general rule is like what? For the incomes earned in previous year, tax will be assessed in assessment year. But there are certain exceptions to that rule. I mean, what are those exceptions? In those exceptional cases, instead of you waiting for the next year, in the same year, the assessment also will be made. Okay, what are those situations? First one, non-resident engaged in shipping business. Sir, why we have to do in the same year? Why can't we do in the next year? Sir, he is a non-resident. He came to India with a ship. We don't know when will he be again coming back or not. Okay, he may come back, he may not come back. That's why for securing our revenue, we are saying what? We'll finalize your liability now itself. But that person is saying like, sir, I don't have P&L now. Middle of the year, how could I do P&L and all? So how do you know my profit? How do you calculate my tax and all? He is arguing. Then income tax people went much more ahead and said like, out of your total receipts in India, or from the goods and passengers loaded from Indian port, okay, whatever the receipts you have, on that we'll apply 7.5% and that will take it as your deemed profit. Sir, not the total receipt, sir. That money, the freight should be either received in India. If it is received in India, wherever passenger onboarded, goods onboarded, it is irrelevant. If the freight is collected in India, okay. Freight collected outside India, then that freight also we should count when? If the passengers or goods are onboarded from India. Okay, sir, the basic residential status rules, sir, if you remember inter-level residential status rules, income received in India, it is taxable, irrespective of resident, non-resident, resident but not ordinary resident. Then, income accrued in India, then it is again taxable to whom? Resident, resident but not ordinary resident and not non-resident also. So that's why freight received in India, income received in India. So wherever the passenger onboarded, irrelevant, it is taxable in India. Okay. Where the freight received outside India, then it should be accrued in India. How do we decide it is accrued in India? When the passengers or goods are onboarded in India, then we can say like the income is accrued in India. So for shipping businesses, they'll calculate the freight. Okay, how much is received in India? Even though received outside India, how much is from India? Okay, you'll take the total. On that apply 7.5%. That is the deemed profit. On the deemed profit, calculate tax, finalize the tax in the same year itself. You need not to wait for assessment year. So why they are doing that? I already said the reason. He is a shipping company, non-resident shipping company. We are not sure whether that fellow will again come back or not. Okay, so there is something called Avu Puli story. Okay, there will be a cow. It will say like, I have to go to my home. There is a little calf waiting for me. Okay, I'll give milk to it and then I'll again come back, then you can eat me. All that stories, that lion listened. But income tax will not listen. Okay, this fellow, the shipping boy, if he said like, I'll go now, next time I'll come, I'll pay. Definitely income tax, mother promise, pinky promise, all those promises and all. Income tax people will not believe. That's why, what they said, this year income will assess now itself. We'll finalize the tax liability now itself. You clear that also and go. Okay, first one. Second one, person leaving India for employment outside India. Okay, sir, he's going for just employment now. What's the issue? Sir, he's going, sir, here in this sense, employment means not literally employment. Any occupation, profession also covered. He's going for a profession outside India, job outside India, business outside India is also covered. But he has no present intention to come back. He has no present intention to come back. Sir, how do we know that he has intention or not? Intentions will change now. Or even though he has intention, will he tell it outside? Sir, he will not tell, but visa will tell. How many years he got the visa, based on that we can decide whether he has present intention to come back or not. Okay, again the same problem, sir. Let's say 9 months he worked here, till December or till January he worked in India only. Now in January, he is moving to US. For all these 9 months income, where accrued? Sorry, sir, in the current year only, January is going to US. Till December, whatever the income he earned, that is from India only, right? On that he has to pay tax in India, right? But he is leaving now to US. Said like what? Sir, assessment year I'll pay, sir. Okay, me Indian, you also Indian, sir, no problem. I'll pay in assessment year. But the moment he went to US, he blocked income tax department also. How do they'll get income tax? That's why they don't wanna trust him. Okay, you are going outside India now, and looking at your visa papers and all, we can conclude that you don't have any present intention to come back. So we'll finalize your tax now itself. Okay, clear your tax liabilities and then go. Okay, so that's why person leaving India for employment outside India and who has no present intention to come back. Third one, AOP, BOI or AJP formed for a purpose, and such purpose or event is accomplished. Sir, AOP formed for a particular event. Let's say, sir, tomorrow is Holi. To conduct a holy event, some 20 people has been formed as a group. Association they have formed. What they'll do, they'll conduct a holy event. Entry ticket for every person is like 1,000 rupees. You could participate there. They'll give freely colors, DJ, music, all these things they'll arrange, which was organized by a group of people, which is called as association. Sir, it was formed only for tomorrow. By tomorrow night, it will get dissolved. Okay, so now let's say after in assessment year means what? Next year, if income tax people went and asked about tax liability, na, they'll say like, out of 20 people, sir, X has taken money, sir, ask X. X will say, ask Y. Y will say, ask Z. So government will not get any tax revenue. That's why they are saying like what? If they are formed for a purpose and the purpose is going to be completed or accomplished, before that accomplishment only, they can assess the tax liability. Okay, then persons trying to dispose or pledge property to avoid tax. Person trying to dispose or pledge property to avoid tax. So let's say, sir, actually lottery, jackpots, all these will have TDS first itself. Then only they'll pay the money. Example, assume you'll not have regular incomes. You got some jackpot or lottery something and you got some 30 crores. Okay, and you know that you cannot earn another 30 crores also. Okay, you want out of this 30 crores, almost 10 crores will be taken by government only as tax. So, okay, you feel so much about the 10 crores which is taken by the government as tax. So, what you thought? You are ready to go to jail also. You wanted to safeguard this 30 crores. You are ready to go to prison also for 1-2 years. Because you think like 1-2 years maximum if I outside also. If I stay outside also. I learn yearly 10 lakhs, 20 lakhs only I learn. If I could skip the tax liability, I can save 10 crores. If that is your mindset, what you did? With the 30 crores, you purchased properties. But the moment you realize like income tax people are going to court you or they're going to recover the tax liabilities from you, this 30 crores properties you changed or you transfer the properties on some other names, your friends' names or family names, okay, like that you have transferred. Why you are transferred? Afterwards, in the assessment year, if income tax people comes also, you'll say like what? Sir, 30 crores, I spent everything, sir, I don't have anything. Whatever the 30 crores I came, that again, next day I played gambling, total 30 crores. Lost, I don't have anything, sir. If you want me to come and sit in prison now, I'll sit there for 2 years. Sir, for this tax frauds and all, not more than 2 years, they'll keep us in prison. Okay, so you are ready for the 2 years and you are saying like that. So, ultimately, government is losing how much revenue? 10 crores. That's why in those cases, if they have information that you are going to pledge the property, transfer the property with an intention to avoid taxes, then that in itself they'll come. They'll not wait till assessment year. Why? If they come in assessment year, now already property transferred, pledged, disposed, everything happened. Then legal battle only, they'll not get any money also. That's why they need not to wait till assessment year. Now itself, they can do assessment and can recover their tax money. The last one, business is going to be discontinued. Once the business is going to be discontinued and business is closed, then there will be no person to pay the tax liabilities to the government, sir. Let's say a company business discontinued, nothing but it is going for liquidation or insolvency. Then before that liquidation, insolvency, finalization itself, they should complete the assessment. Next year if they come, nothing will be there. Even if they go and ask liquidator also, you should come and ask me first itself. Now if you come, what will I do? I already distributed the assets to all the debtors, all the shareholders also. So now I can't do anything. So ultimately who is losing? Government is losing. That's why when the business is going to be discontinued, then also instead of waiting till assessment year, in the current year itself assessment can be made. So there are 5 instances where instead of waiting till assessment year, in the same previous year itself, assessment also can be made. Sir, assessment means not payment of tax. Assessment means finalizing the tax liability. Okay? So what are the situations, sir? Non-resident engaged in shipping business. Individual or a person living in India for employment outside India. AOP, BOI formed for a purpose and such purpose has been accomplished. Okay, persons trying to dispose or pledge property to avoid tax. Discontinued business in these, okay, in these exceptions, previous year income not will be, sir, might be assessed to tax in previous year itself. It's not like conformly they should do assessment in previous year itself. Okay, on visiting the SSC, income tax people got some clarity. Okay, we can wait till assessment year also, no problem. Then they can wait till assessment year. It's not compulsorily, but they can do assessment in the previous year itself in these cases. Okay. The next concepts are MMR. MMR means maximum marginal rate. When this MMR point will come means, sir, in many cases TDS has to be deducted. When TDS is being deducted to me, let's say someone is making a payment to me, on that TDS has to be deducted. Then I should provide my PAN details and all. If I didn't provide my PAN details and all, then tax with TDS, let's say actual TDS rate there is 194J, professional service I have provided. The TDS has to be deducted to me at what rate? 10%. But I didn't provide my PAN. Okay, so then they will be deducting TDS at a rate of MMR, maximum marginal tax rate. And then in the case of trusts also, assessment of trust. So trust also on violation of certain conditions, charitable trusts. Sir, mostly charitable trust incomes are exempted. But if they violate conditions, then the trust incomes are also taxable at a rate of MMR. So what is MMR? Take the highest slab rate applicable. What is the highest slab rate applicable? 30%. Take the highest surcharge slab applicable. Old regime na 37%, default regime na 25%. On that even apply cess also. Highest slab rate of tax, highest surcharge rate slab and highest cess. You apply, you will get the MMR. See, old regime, sir, tax rate 30%, surcharge rate 37%, sir, cess 4%. Sir, if you add now, it is like 71. It's not like that. Surcharge 37% has to be levied on what? 30%. And cess 4% has to be levied on what? Tax plus surcharge. Then the cumulative total will be 42.744. Okay, don't argue with me like, sir, 30 plus 37 plus 4 is 71, sir. Don't you know max also? Then here under default regime, tax rate how much? 30%. Surcharge rate 25% on what? Tax plus cess on tax plus surcharge. Effectively the MMR comes to 39% here and here it is 42.744%. Then now we are going to talk about the restriction on surcharge. What is the restriction on surcharge? So first pages when we discuss surcharge, under the default regime, sir. See, under the default regime, up to 50 lakh surcharge is what? Nil. 50 lakhs to 1 crore is how much? 10%. 1 crore to 2 crores, 15%. Above 2 crores, 25%. But here for this 25%, what we wrote? Restricted to 15% in case of 111A, 112, 112A and dividend income. So, on these incomes, the maximum surcharge rate that could be levied is only 15%, not 25%. The same points applicable even under the default old regime also. What is old regime? See, surcharge rates under old regime. Up to 50 lakhs nil, 50 lakhs to 1 crore 10%, 1 crore to 2 crores 15% of income tax, 2 crores to 5 crores. Actually how much, sir? 25. Above 5 crores 37. But this 25 and 37 percentages are not applicable in case you are having these incomes. Which incomes? 112 income, 112A income, 111A income and extra dividend incomes. So on which 4 incomes the surcharge rate is restricted to 15%? 111A, 112A. Listed equity shares, units of EOF, units of business trust. Then 112, long-term capital gain, other long-term capital gain. Then the fourth one is dividend income. On these 4 incomes, the surcharge rate is restricted to 15%. It's okay. So now that point only we're going to discuss in detail, sir. Okay, let us take an example first. Sir, a person is having PGBP, business income of 2 crore 20 lakhs. PGBP income of 2 crore 20 lakhs. And long-term capital gain under section 112. Other long-term capital gain 1 crore. So what is the total income, sir? 3 crore 20 lakhs. There are no chapter 6A deductions also, gross and net also same, 3 crore 20 lakhs. Now, first we should compute what? Tax. Tax on first what, sir, we'll take what? Individual, he is an individual and we'll take it under default regime. Individual and under default regime. First we should compute tax on what, sir? You compute on normal PGBP income or the normal rate income, 2 crore 20 lakhs. First 24 lakhs, 3 lakhs, balance into 30%. How much we got, sir, tax? 61 lakh 80,000. 61 lakh 80,000 is the tax on PGBP income. Then long-term capital gain under section 112. How much we are having? 1 crore. 1 crore, this 1 crore is taxable at what rate, sir? 12.5%. Sir, don't say like in excess of 1,25,000. That comes when? 112A. Okay. Long-term capital gain under section 112, how much, sir? 1 crore at a rate of 12.5%. How much it is? 12,50,000. So what is the total tax? 74,30,000. Okay. Now surcharge. Sir, 3.2 crores na above 2 crores. Actually 25% surcharge is applicable. But surcharge on dividend income, 111A income, 112 income, 112A income is restricted to 15%. So what we should do? Surcharge also we should do separately. Not together. Surcharge also we should do separately. So surcharge on 61 lakh 80,000. How much, sir, surcharge? 25%. Because normal rate income, there is no restriction, right? So we'll apply 25%. How much? 61 lakh 80,000 into 25%. 15 lakh 45,000. Then surcharge on long-term capital gain 12 lakh 50,000. What is the surcharge rate we should take, sir? 15% only. How much? 1 lakh 87,500. So now if you add total 74 lakh 30 plus this 2 will get tax plus surcharge. Okay, this one surcharge alone 17 lakh 32,500. Now tax plus surcharge. 74 lakh 30 plus 17 lakh 32,500. 91 lakh. On this set a rate of 4% will do. Okay, so are able to understand how we should do restriction and all. Now, but still there is a problem, sir, here. The problem is, sir, everybody understood this calculation, right? Now I will give you another explanation, sir. Same example only. I will change numbers slightly. Sir, here PGBP income is 1 crore 20 lakhs. Long term capital gain is 1 crore. Then what is the total income? 2 crore 20 lakhs. Now, on PGBP income, what is the tax? 1 crore 20 lakhs, we should calculate tax. First 24 lakhs, 3 lakhs, 96 lakhs into 30%. 1 lakh, 31 lakh, 80,000. 3180,000. 31 lakh, 80,000. Then on this 1 crore, same only. Okay, 12 lakh, 50,000. So what is the tax liabilities are total? 41 lakh, 44 lakh, 30,000. So now, on surcharge on this 31.8 lakhs, we should levy at what rate surcharge? 25% actually. Why? Because the total income exceeded 2.2 crores. That's why surcharge rate applicable is how much? 25%. Okay. But whereas on the long term capital gain, it is how much? 15%. But now you should understand here, sir. Sir, simple story, sir. There are two students, sir. One student used to study hardly everything and all. But there is another student, his friend only, who is not much serious. He used to go to movies, roam across, everything, not serious preparation also. On the result day, the one who studied sincerely didn't clear. The one who didn't study properly got cleared. Now the pain will doubles. It's not about only he failed. It's about what? The other one cleared also without any effort. That's the real pain, right? Same way here, sir. PGBP, only PGBP is there, not? It might have enjoyed 15% surcharge rate only. Who is the one responsible to make it 25% long-term capital gain? Because of long-term capital gain only, total income exceeded 2 crores and they got surcharge of 25%. But the one because of whom 25% came is enjoying again 15% only, but the other one is getting suffered at a rate of 25%. Is it correct? It's okay. Humanly, emotionally, it is not correct. Because of this long-term capital gain, this is the villain. Because of this only, total income exceeded. Sir, why you will say long-term capital gain only villain? Why can't PGBP is the villain? Sir, why na? PGBP is a regular income, business income. Long-term capital gain is not regular income, which comes once in a while. So this long-term capital gain is only the culprit. Because of this only, total income exceeded 2 crores and surcharge 25% rate is being applicable. Because of it only, the PGBP was pushed into 25% surcharge. Okay, if both at 25%, na fine. Like, okay, this fellow studied, the other person not studied, both failed, okay, somehow, okay. But the other one is being what? Enjoying the benefit past. Same way here, capital gain is getting the benefit of 15%. Okay, it's like the other one it pushed into 25, but it is enjoying 15% surcharge limit only or 15% surcharge rate only, which is wrong. For that also they introduced a point. If at all, only because of this special incomes push only, the other incomes were into 25%, then they also need not to be taxed at, need not to be levied surcharge at a rate of 25%. If they are individually there, what is the surcharge rate applicable? If PGBP income is only there, what surcharge rate is applicable? 15%. Now apply 15% only even on the PGBP income only. Understand, sir? Okay. So look at these examples now. Surcharge restricted to 15% on dividend income, 111A, 112 and 112 incomes. However, if because of dividend and special incomes only, the total income pushed to higher slab of surcharge, then surcharge rate on other incomes would be the rate that applies if no dividend and special incomes. See, so we'll discuss the case 1, case 2, case 3. So in case 1, dividend 120 lakhs, special income 100 lakhs, other income na the normal PGBP or other incomes 210 lakhs. What is the total income, sir? 430. So here there is no mistake of dividend and special income. Even these two are not there also, it is already in which slab? 25% slab only. So these two are not pushing. Okay, already other income is under which slab? 25% only. So there is no mistake from dividend or special income point of view. They are not pushing because he is already under the 25% surcharge category only. So in this case, no problem, sir. On dividend and special income, will apply what? 15% surcharge. On other income, 25% surcharge. Got it, sir, this point? Then case 2. Dividend here is how much? 70 lakhs. Special income, 150 lakhs. Whereas other income is how much? 110. Sir, now other income 110. 110 now, what surcharge rate applicable? 15% only. But now because of these two people only, it was pushed to higher surcharge 25%. Higher surcharge 25%. So who are the culprits? Dividend and special income are the culprits. Otherwise it might have enjoyed only 15% surcharge only. So in this case, we will not penalize other income also. This will also be at what rate? 15% only. Okay, because of other incomes only it was into 25, right? If the others are, if the dividend and special income enjoying 15%, you cannot charge them at 25%. So these also 15% only. Now case 3. Dividend how much? 100 lakhs. Special income 120. Other income how much, sir? 60 lakhs. Sir, other income 60 lakhs. Individually na it will enjoy which benefit? 10% only. Because of these two, it was pushed to 25. Now other income became smart and asking, sir, can I take 10% benefit? No. Okay, you cannot come below the dividend and special income, sir. Okay, so maximum you'll have how much? 15%. Minimum you should have how much? 15%. You cannot come below 15%. Understand, sir? This case is also important. This case 3. Then case 4, if you see. Sir, case 4 and case 5, I wrote under old regime. Case 4 and case 5, old regime. Dividend 150, special income 150, whereas other incomes are 250. Total became how much, sir? 550. 550 na which surcharge rate? 37% they are. Sir, individually other income might have enjoyed 25% only. Because of this dividend and special income only, it was pushed to 37%. Okay, otherwise it might have enjoyed what? 25%. So that's why it is restricted on them to 25%, whereas on special incomes it is 15%. The last one, 220, 230 and this one 90 only. So because of them only, it was pushed from 10% to 37%. Okay, so okay, now we understood because of their push only it was moved to 37. But can it again come back to 10%? No 10% option. Minimum it will come to 15%. Minimum it will come to 15%. Understand, sir? Okay, then we discussed already undisclosed source of income concept also. Then average rate of tax. Average rate of tax. What is average rate of tax, sir? Sir, understood surcharge concept? Any doubts? Average rate of tax. Sir, you think like, see, I think you already understand, sir. We have discussed so many points in the basics chapter only. All these are basics linked to tax calculations only. These are fundamentals. Forget about which chapter we are studying. These fundamentals should be there always in your mind. We cannot do mistakes at fundamental level. All these points which we have discussed are like fundamentals only. Average rate of tax. How do we compute average rate of tax? Sir, average rate of tax will compute by find out the tax payable and divided it by net total income. You will get average tax rate. So tax payable na tax plus surcharge plus cess, the total final tax liability you take before adjusting TDS TCS credits. Before adjusting TDS TCS credits, the final tax liability you found out, not payable. That final tax liability, tax plus surcharge plus cess divided by total income, if you do, you'll get average tax rate. See an example. SSE is an individual, age 45, under 115 BSc. Now tell me, sir, take this example and find out his average tax rate. Take this example and find out his average tax rate. This point, you want. Where, in which case you are referring? Case 3, yes. 60 lakhs. Yes. See, actually based on total income we should decide. If on total income, if you take 280 lakhs means how much surcharge rate applicable? 25% is applicable. But sir, first you should understand, dividend, special income, all these are not recurring incomes. These are called as special characteristics. Okay? We don't know when the company will declare dividend. It's not in our hands. And the same way, long-term capital gains, short-term capital gains, these will happen once in a while. These are not regular incomes. Okay? So, because of these irregular incomes, our regular income is being penalized with a higher surcharge rates. Okay? So, now what happening? 280 lakhs is the total income. We should actually get what surcharge rate? 25% surcharge rate. But these two have a benefit of restriction. 15% only, 15% only. Okay? Now, because of these two only, this one was pulled to or pushed to 25%. But the other two are enjoying what benefit? 15% benefit. Okay, so this is the one which is suffering. So to give a relaxation to this, what they said, this also will be taxed at the same rates at which dividend and special incomes are being taxed. Then 10% only. Then 10% only. Appudu kuda 15%. See, because first primarily surcharge is decided on what? Akkada mana మొత్తానికే surcharge ఉండకూడదు అనట్లే. ఓకే, ఇంజస్టిస్ జరుగుతుంది అని చెప్పి దాని వరకు రిలాక్సేషన్ ఇద్దాం అనుకుంటున్నారు. సార్, యూ షుడ్ అండర్స్టాండ్ ద కాన్సెప్ట్, ఇంటెన్షన్ ఆల్సో దర్. దే డోంట్ వాంట్ టు రిమూవ్ ద కంప్లీట్ సర్చార్జ్ బికాస్ ఇఫ్ ఎనీ అన్డ్యూ advantage is there, they want to remove only that undue advantage or such undue thing only they wanted to remove. Okay? Yes, why? Because other income alone you should not check. What you should check? Total income. Total income is already above 50 lakhs only, na? That's why it is being taxed at 15%. Depends. See, if dividend income, other income together, it is 70 lakhs only. Dividend income 30 lakhs, other income 40 lakhs. Total how much? 70 lakhs. If it is 70 lakhs, now what is the surcharge rate applicable? 10% only. So then 10% is only applicable, right? Understand? See, if it is going beyond 15%, then they are putting a cap on 15%. Then on the other incomes also, minimum how much? 15%. How much ever it is, other income 1 rupee only, still it will get surcharge at what rate? 15%. Understand, sir? Once you got above surcharge rate, once your total income exceeded 2 crores, you will have minimum surcharge of 15%, irrespective of how much ever you have as other income. Irrespective of how much ever you have as other income, minimum how much will be there? 15%. But on the dividend and special incomes, it is restricted to 15%. Depending on how much is their other income, it could be at 15, it could be at 25, it could be even at 37 also. Yes. I did a separate video also on this. Okay, there's a 10-12 minutes I have did on surcharge also, but nobody will listen to the important contents and all. It doesn't got much views also, then I feel demotivated and stop doing such kind of videos also. Or recently only, 1.5 months back I did. Okay, so do this, sir. Calculate your average tax rate. Hmm? 20.30. Same. I understand your doubt. Sir, if other income is below 50 lakhs, then how such a? See, surcharge is not decided only based on other income. Surcharge is decided based on total income. If your total income is already above 50 lakhs, then surcharge is there already. Sir, the same doubt again they are posting, sir. Here if it is, let's say instead of 60, if it is 40, then what is the total income, sir? It will be 260 lakhs. Still total income about 2 crores only, right? 25% surcharge applicable. If all this concept is not there also, you just know surcharge only. Then also what? More than 2 crores surcharge applicable at a rate of what? 25%. Then extra point what we said, on dividend and special income, you should not apply 25%, you should apply only 15%. Okay, they are good on them, 15% only. But these people are other income. If there are no special incomes, assume in that year there are no special incomes, no dividend, then only 40 lakhs is there. Only 40 lakhs. Now actually it doesn't even have to pay surcharge. But who are the culprits here? Dividend and special income only. Because of them only it was pushed to other thing. Sir, simple. I'll give one more example, sir. Sir, I was motivated to kill someone. Okay, let's say I'm the murderer. I assassinated someone, but it's not my intention. I was motivated by someone. He given me supari or something. Because of him only, I went and killed. Now, will I be innocent? Even with their motivation also, ultimately I only did right. Same way here also other income innocent only. But because of the dividend special incomes, it was already pushed into higher slabs. So maximum what can be done, sir, here, if he got 5 years sentence, imprisonment, then for me also they should do what? 5 years imprisonment only, because my motto is not to kill. Yes, ultimately I only killed, but my motto is not to kill. He is the one who motivated me. If he gets 5 years sentence, then I also should get 5 years sentence only. The same way here, yes, it was pushed by dividend and special incomes only. Okay, if they were not there, I am innocent. I will not have any surcharge. But because of their motivation only, I did the extreme act and I am suffering with 25%. Now what justice is saying, like, okay, you don't have the real intention. Because of their motivation only or push only, you are here. So whatever they'll suffer, the same thing you also suffer. So since they'll get 15%, I'll also get 15%. Right? You got some clarity, or it want much more? అర్థమవుతుందా అండి? అది ఇండివిజువల్గా ఎస్కేప్ అయ్యేది అయినా కూడా ఆల్రెడీ ఇంకా క్రైమ్లో ఇన్వాల్వ్ అయిపోయింది, బికాజ్ ఇట్ వాజ్ ఆల్రెడీ పుష్డ్. సో మొత్తానికే ఉండదంటే ఇంకా కుదరదు, సిన్స్ ఇట్ వాజ్ ఆల్రెడీ పుష్డ్. ఇంకా మినిమం సెంటెన్స్ లాగా మినిమం 15% ఇంక తీసుకోవాల్సిందే. Sir, what is the average tax rate, sir? Okay, see, 20.31 is the correct one, sir. See, first what we took income from house property, 7 lakhs only. Interest, 25 lakhs under IFRS. Dividend, 10 lakhs. Long-term capital gain under 112A, 15 lakhs. Sir, here some mistake what we'll do is like we may take 13,75,000 by ignoring first 1,25,000 because first 1,25,000 is what? Not taxable. Above 1,25,000 is only taxable. That mistake you should not do. You should take what? Total 15 lakhs. What is the gross or net total income? 57 lakhs. Then calculate tax. Sir, what is the normal rate incomes? This 7 lakhs and 35. 42 lakhs. On 42 lakhs, first 24 lakhs, 3 lakhs. On balance 30% if you apply, how much? 8,40,000. Correct only na? Then on special rate income, what is the special rate income, sir? 112A. So on 15 lakhs, first 1,25,000 ignore. On 13,75,000, if you apply 12.5%, how much it is? 1,71,875. So total tax how much? 10,11,875. On that surcharge at a rate of 10%. Surcharge at a rate of 10%. How much? 1,01,188. Plus cess at a rate of 4%. 44,522. Then rounding off, it came to 11,57,590. So 11,57,590 divided by 57 lakhs into 100. It is 20.31%. Okay. Then sir, it is clearly known to us by now. Optional regime, I mean default regime is only better than old regime. Why? Because the slabs are high. Till 24 lakhs you could enjoy lesser slab rates benefits only. Whereas under old regime from 10 lakhs itself it is 30% only. So if we compare at this point only, obviously default regime is only better. If that is the case, if the situations are that much clear, then government itself can simply remove the old regime, right? No, sir, there are other points also to be considered to decide which regime is better. Okay? Deductions related, chapter 6A deductions, anyhow we'll discuss in the deductions chapter. We'll think of heads wise. How many heads we have? Salaries, PGBP, salaries, house property, PGBP, capital gains, IFRS. Sir, PGBP and capital gains anyhow we'll discuss separate. But salaries chapter will not discuss now again. House property will not discuss again. So, with respect to old regime and default regime, if any adjustments are there in salaries or house property, those points alone we're going to discuss now. PGBP and capital gains we are not discussing now. Why? Because separately we'll discuss those chapters. There itself will address those issues also. Okay? Now, certain exemptions and deductions are not allowed when a person has chosen default regime. Okay, first one. Income from salaries related. Sir, HRA exemption will be there. Metro city, non-metro city. Okay, actual HRA, rent paid minus 10% of the salary or 40% of the salary or 50% of the salary depending on metro cities or non-metro cities. That exemption will calculate. Okay. That HRA exemption is available only in old regime. In default regime, such HRA exemption is not available. Then, leave travel concession. What is leave travel concession, sir? I'll just tell you the concept so that you can connect at least. Okay, you need not to remember all those points also, just at least you'll connect. Sir, in a block of 4 years, employee along with his family within India, if you do any domestic travel, and for the travel, if the amount is paid by employer, that is a extra benefit only. But that will be exempted to the employee. Leave travel concession is exempted, and such exemption can be availed twice in a block of 4 years. That is available only in old regime. If you choose default regime, that exemption is not available. How much ever the concession you got, that concession is also taxable. Okay? Second one. Children education allowance. You remember this, I think. 100 per child. Maximum 2 childs is allowed per month. Maximum 2 childs and 100 per month is given as is the exemption for children education allowance. Okay, that exemption is available only in old regime. In default regime, that exemption is not available. Then children hostel fee allowance. Children hostel fee allowance. How much, sir? 300 per month per child, maximum 2 child used to be exemption under the old regime. But such exemption is not available under the default regime. Then travel allowance for disabled. For disabled, sir, they used to give a travel allowance 3,200 per month. Okay. For normal travel, for normal people, there is no travel allowance allowed. Okay. Even under the old regime also, it is taxable. For disabled people, if anything is given 3,200 per month, it is exempted under the old regime, but default regime, it is also not applicable. Then there are other allowances, sir. Travel allowance on transfer. So you when transferred from one place to another. So when you are transferring, you transferred from one place to another place, you need to change your family, things, everything you need to shift. For that shifting related, you incurred expenses. That was reimbursed by employer. That is also a benefit actually. But that is not, that is exempted in the old regime, and the exemption is even continuing in the default regime also. Okay. Travel allowance on transfer, it is exempted in old regime and even under the default regime. Same way daily allowance. Sir, you are a marketing guy. Every day you need to visit so many customers and all, and you need to bring business. So every day they will give you daily allowance, 200 rupees, 300 rupees to cover your petrol expenses and all. Okay. That daily allowance to the extent of amount actually spent is exempted even under old regime and even exempted under the default regime also. Same applies even to uniform allowance. So these are exempted only to the extent actually spent. So understand? For you 10,000 was given as uniform allowance. But with the 10,000, you spent only 4,000 for purchase of uniform. The other 6,000 you retained with yourselves. Then the exemption available is only to the extent of 4,000 because you spent only 4,000. That is available both in old regime as well as in the default regime. So under salaries, what are the exemptions not available under default regime? HRA not available, leave travel concession not available, children education, children hostel fee, travel allowance, okay, are not available. Whereas travel allowance on transfer, uniform allowance, daily allowance, these are exempted even under the default regime. Then retirement related, gratuity related exemptions, leave encashment related exemptions, pension related exemptions, all those exemptions are available even under the default regime also. Then perquisites. Perquisites, if they are taxable in old regime, then they are taxable even in new regime. There is no difference between perquisites also under old and default regime. The only differences are where HRA, leave travel concession, children education allowance, children hostel fee allowance, travel allowance. These are exempted under the old regime, but exemptions are not available under the default regimes. Then deductions under section 16. Standard deduction is to be there, sir, under salaries chapter. This is important, sir. It will come in other chapters also. In old regime, the standard deduction is only 50,000. But whereas under default regime, the standard deduction is 75,000. Okay. So everybody remember this point, very important. Under the default regime, standard deduction is how much? 75,000. Whereas under the old regime, it is only 50,000. Under the old regime, there are two more other deductions. What are the two more other deductions? Entertainment allowance is there, professional tax is also there, which can be claimed as deductions. But those two are not allowed in default regime. There is no deduction available with respect to professional tax and entertainment tax under the default regime. So default regime, what points you should remember? First and foremost important point is about standard deduction. Under default regime, for salary, standard deduction available is 75,000. Old regime, 50,000. Okay. And which exemptions are not available? HRA, education allowance, hostel allowance, leave travel concession, travel allowance to the disabled. These are not available. Rest all remains same only, mostly. Then we came to house property. The last page, sir, in basics. Echo is coming. Yes. We'll try to do something today. Janvi, only right? Okay. I'll ask them to do something and then we'll try tomorrow. So based on that again we can make corrections. Then income from house property. Salaries points done. Default versus old regime. House property. Sir, under house property, what is the format? First we'll do. First we'll take what? Actual rent with expected rent. How do we calculate expected rent? Fair rent or municipal rent, whichever is higher, restricted to standard rent, that is called what? Expected rent. Such expected rent should be compared with actual rent. Whichever is higher is called as GAV. From GAV we'll subtract what? Property taxes or municipal taxes. Then we'll get what? NAV. Okay, so till NAV no differentiation at all. From NAV what we should do? Standard deduction under 24A. 30% of the NAV is allowed as standard deduction. That is also same under both old regime and new regime. Then 24B is about what? Interest. Sir, in old regime, how much interest is allowed as deduction? Let out property na unlimited. How much ever interest is there you can claim as deduction. Self-occupied property na only 2 lakhs. Let out property, no limitation at all. Self-occupied property, the maximum interest you can claim as deduction under 24B is 2 lakhs only. Now what about default regime? Sir, under default regime, if the property is self-occupied, then no interest you can claim as deduction. Property self-occupied, not even the 2 lakhs also you can claim as deduction. Let out property, no restriction. Let out property, old regime, new regime, same only. Self-occupied only difference. What is the difference? In old regime you can claim interest up to 2 lakhs as deduction, but in new regime or default regime, such 2 lakhs deduction is not available. Then, sir, let out property, self-occupied property means what? In old regime there will be loss only. For self-occupied property in old regime, obviously there will be loss because NAV will be nil, self-occupied property. And you will claim what? 2 lakhs interest deduction. So loss will be 2 lakhs. This loss 2 lakhs you can set off with any other head income. House property loss can be set off with any other head income. So let's say let out house property. Let out house property loss could be even more than 2 lakhs also. You got my point, sir? Why self-occupied property loss will be maximum 2 lakhs? Because NAV is nil and maximum deduction you can claim is with respect to interest, that is also 2 lakhs. Your maximum loss could be 2 lakhs with respect to self-occupied property. If it is let out property, sir, let out property, sir, I have GAV of 2 lakhs. Okay, then no property taxes, NAV also 2 lakhs. Then what I will take? Let out property, sir, this is 30% standard deduction. How much? 60,000 I will subtract. Then still I am having 1.4 lakhs. Now what I can claim? 24B interest deduction. Sir, interest I paid for that property is 5 lakhs. So if I claim 5 lakhs as deduction, what is the loss here? 3.6 lakhs is my house property loss. 3.6 lakhs is my house property loss. Okay, since it is a let out property, the computation remains same in both old regime as well as under the default regime also. This is the loss. Now this loss under old regime, I can set off this loss with other heads also, maximum to the extent of 2 lakhs. House property loss can be set off with other head incomes, maximum to the extent of how much, sir? 2 lakhs. But under the default regime, you cannot set off house property loss with any other head income. Within the head only you can set off. Intra-head only set off possible. Inter-head set off is not possible under the default regime. Sir, are you able to get my point, sir? Under old regime, loss from house property can be set off with other heads also. Maximum how much? 2 lakhs. But under default regime, such set off with other heads is not available. Such set off with other heads is not available. See, carry forward and set off of house property loss. Intra-head set off, no limit under both regimes. Eligible for set off with other heads maximum 2 lakhs. Intra-head is also possible under default regime. Set off only within the head. Sir, you have 2 house properties. One property has loss, one property has income. That you can do set off. But with other heads like salaries incomes, with PGBP income, if you want to set off, that is not possible. Whereas carry forward of loss is same, 8 assessment years, here also 8 assessment years. So what are the two major differences, sir, with respect to house property? For self-occupied property under old regime, you can claim interest deduction. Whereas under default regime, for self-occupied property, interest deduction is not available. Let out na same. Self-occupied only, interest up to 2 lakhs is available under old regime, whereas under default regime it is not available. The next one is about set off of losses. Under old regime, the loss from house property can be set off with other heads also to the extent of 2 lakhs. But under the default regime, such set off with other heads is not available. Rest all remains same. Then PGBP capital gains anyhow we'll discuss separately. IFOSR 1 point only with respect to family pension. With respect to family pension, under old regime there is a deduction available. Family pension means what, sir? Employee expired. Okay, employee expired. Employee wife or employee husband, spouse of employee is getting the pension money after expiry of employee. So on that pension money, they have certain deduction. How much? 15,000 or actual, whichever is lower. Under what regime? Old regime. Whereas under default regime, it is 25,000 or actual, whichever is lower. On family pension, old regime, 15,000 or actual, whichever is lower can be claimed as deduction. Whereas under default regime, 25,000 or actual, whichever is lower can be claimed as deduction. Rest all remains same. There is no difference between optional regime and default regime and old regime. Okay, sir. It's okay. Sir, we need not to open workbook and solve questions with respect to first chapter. First chapter, the questions will be related to marginal relief only. We already solved marginal relief examples yesterday and I asked you to do also. If you have time today, open your workbook and solve the questions also. All of them will be related to marginal relief related questions only. Okay. But very important, sir, first chapter till your last class, this point should be in your mind only. Okay. But most of the cases, 90% of the cases, what happens means, today everybody will answer with respect to these surcharge points, rebate points and all. After 10 days, 12 days, when really we need to apply, when the point comes to apply, then nobody will recalls them, sir. So if you wanted to recall them now itself, you should revise them. If you are a single group student and you are having time, means do cumulative revisions. It's not like read first chapter and leave it. Okay. After completion of second chapter also do cumulative revision, first and second chapters together. So once you do cumulative revisions kind of, then, sir, yes, first chapter today it will take 1 hour. Tomorrow it will take half an hour only. Day after tomorrow 15 minutes. Then 10 minutes, minimum 10 minutes. You cannot take it beyond or less than 10 minutes. But every day if you do cumulative revisions now, then the retention will be more. Okay. The only thing to remember DT for longer periods now, cumulative revisions, and don't count how many times you revised. Okay. It may require 10 times, it may require 15 times, 20 times also. So revision number is not a criteria to pass. Ultimately, whether you remember or not. Okay. Someone can remember it only one time also. His IQ is good. Okay. We cannot borrow IQ now. Or we cannot lend IQ now. So only thing what we can do is like you should revise much more number of times only. Okay. And don't trust the ones who have cleared. Why? The problem is, sir, if I cleared now, I'll say like I didn't even study it. I just went to exam and I cleared also. Okay. No, who will question me? Okay. Who will argue with me? I already cleared, right? I can say whatever I want. Okay. So you are still in the process of clearing, right? So you don't compare with them. Just because he studied with 1 time revision or 2 times revision, it doesn't mean for you also 1 times and 2 times revision will be enough. Don't compare in such a way. What's the loss you have if you revise 5 times? If you get group 3 only, you are writing. If you get 300 marks out of 400, is it a problem to you? If you do some extra revisions, you will get some extra marks. Is it a problem to you? No, right? Then go and do. How many number of revisions possible? Do that many revisions. Don't count 1 is enough, 2 is enough, 3 revisions are enough. Understand, sir? Okay. Thank you.